morning and welcome to the VSA Morning Miner. It's Thursday the 28th of August and I'm joined by Paul Rankin. Paul, we've got a busy morning, but how are you?
Very well, thank you. Very well. Yes, and a very nice day outside, I see.
Yeah, well, we've got lots of news to cover. We will start with Q2s from Guanajuato Silver, where Andrew is visiting today.
Yes, that's right. Guanajuato did put out Q2 results on a quarter-on-quarter basis. It does show some slowdown in productivity or performance-wise from the Q1. And hence we see the incentive, I guess, over the last several weeks worth of press releases as to how to get things moving back on track here. They did have net loss for the period of $3.7 million, and costs rose to 21.67 per ounce cash cost on a silver equivalent basis, and 26.38 an ounce on an all-in sustaining cost basis. Production for the quarter came in at 659,000 silver equivalent ounces total. And they wanted to highlight, too, that the net loss for the period was attributable to non-cash items, so they don't directly affect the balance sheet. But we would otherwise say here, too, that the announcements we've seen the last couple of weeks do support the idea that they will get the performance and production rate, particularly through the mill, back on track in the second half of the year. And the successful fundraise that they just completed not that many days ago will certainly help for that as well.
Yeah, that was about $18 million, so substantially strengthens the balance sheet and will help operational improvements and tidying up liabilities as well. That's really been something that's hampered the company over the last couple of years, even though it's been making operational progress. But $8 million of mine income, sort of gross profit equivalent level for the first 6 months, is still a significant achievement compared to a loss of 700,000 for this period last year. So they are making significant steps forward, as the revenue is only slightly high, about $1 million higher year on year, but they've managed to cut about 9 million of costs out year on year. So we can see a way forward there. So that's very good for Guanajuato. Also, an update from EQ, who completed a fundraise earlier in the year.
Yes, that's right. Just a short note here to say that EQ, the ASX-listed tungsten producer in Spain, have successfully commissioned their third XRT ore sorter for the Saloro mine there in Spain. That used to be, if shareholders remember, in the UK, the Baruca Pardo operation previously on an AIM-listed company. And with that relevant performance tests and ramp up is now completed, it is operating at a rate of 150 tons per hour in the sorting circuit, which is a 50% increase on prior levels.
Since that was an AIM company, the big turnaround that EQ have made operation is installing the first two ore sorters, and that has made a huge difference to operational and earnings performance there. So we expect this to have a very positive effect on earnings, and it's something that was bought out of the fundraise proceeds. There's also a brief note from Tungsten West. They have an LOI from the Export-Import Bank of the United States. There's obviously been a few projects who've been getting these LOIs from the bank, but I imagine if they actually do end up using this, something has gone wrong in their financing process, as they're hoping to be funded by the end of the year. $95 million they've been promised those, so this as a backup would be welcome. But given how slowly it's likely to take to get money out of this department, I think commercial alternatives are probably more beneficial.
All right.
We've also got interims from Serabi Gold.
Yes, those are pretty good looking numbers too here. Gold production for the first half came in about more than 2,000 ounces higher than the corresponding 6 month period of 2024. 20,545 ounces produced. Cash held as of the 30th of June rose by $8 million to $30.4 million. Post-tax profit had doubled to $18.9 million on a year-on-year basis. And net cash flow from operations came in at $19 million, which is an increase of more than 200%. On the prior period as well. All that driven, of course, by a significant average gold price they received of just under $3,100 US per ounce on sales, which is a good $800 higher than the previous period. Cash cost came in at $1,379 an ounce, which was a fall of or an improvement, I should say, of about $26 an ounce. And all-in sustaining costs came in at just shy upward of $10 an ounce, now at $1,792 an ounce.
Well, with yesterday's news from Hochschild and the other news from Metals Exploration today, highlighting an issue with their Biox plant because of cyanide contamination from illegal mining, and now they're looking at the lower end of their guidance range. Serabi is perhaps the sort of most reliable performing of the London listed gold producers, and with that good set of results, they're perhaps the only one that isn't having an issue.
Well, that's certainly good to see, and their forecast on forward guidance for the next year or two also looking very, very good as far as their production increases that they're targeting for. So, looking very good at this point.
All right, Paul. Anything else?
That's all we'll cover for today, given the time.
All right. Thanks, Paul. We'll be back tomorrow.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.